Arbor Realty Trust stock presented earnings last week with a beat on EPS and revenue. The stock went up a little bit, but only to come down right after. And year to date you're looking at a minus 15% so far. But people love ABR stock mostly for different reasons, which is the dividend. And I understand why, with dividend yield at 13%, which is an insane number of course. The growth numbers also look pretty impressive. So could this be the perfect time to buy ABR stock? Well, I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does ABR do? Arbor Realty Trust is a specialized real estate finance company. And this is very important. It's not a REIT, but a finance company. It invests in a diversified portfolio of structured finance assets in the multifamily and commercial real estate markets. In here we see the fourth quarter results that they just released. We see net income at $0.48 per share and distributable earnings of $0.51 per share. So our 0.43 dividend is covered. For the full year it is also looking pretty decent, with a net income of $1.75, a 5% increase year over year. They also did 2 dividend raises, which is very nice, resulting in a 7.5% growth year over year. In here we see the agency loan volume. The interesting thing is that the fourth quarter they showed some decent growth, but on the full year numbers they are only up a little bit. In here we see that ABR has a high focus on multifamily homes, with 89% of the total portfolio. Single family represents 9% of the portfolio. Around 24% of the portfolio is located in Texas, while Florida is sitting at 16%. And now that we know a bit more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analysis every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. ABR is a 2.9 billion market cap company. PE ratio is at 7.8, which could indicate that they are undervalued right now. Later in this video I will show you my 3 price targets for ABR, so make sure to watch until the end, because PE ratio is only telling a small part of the full story here. Revenue is at 721 million, and in this graph we see that revenue went up in the long run. Most recently revenue is slowing down a little bit. Over a longer period of time margins are going up and down a bit. Most recently margin seems to be stabilizing. Let's see what in the coming periods will happen. EPS is following the same pattern as the margins. I would prefer an increase of course, so keep an eye on this number as well. Analysis expect a decrease in EPS this year. From there they expect a small increase. For the revenue it is a pretty similar story, and to me this is both pretty interesting. I think it is also really depends on what the Fed will do in the coming years. Return on assets is sitting at only 1.7%, which is a low number. Return on equity looks really good, and return on invested capital is sitting at 3%, which is slightly higher than the 5-year average, which is the positive thing here. However, to me this number is too low. Current ratio is at 36, which is a big potential red flag to me. The fact that it is coming down comforts me a little bit, but definitely keep an eye on this number. Right now ABR has 12 billion in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash. ABR has roughly 935 million in total cash, so they can't pay down a big chunk of their total debt. This is something that I don't like. So it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up and down in the long run, but in general I would say it's going up. Shares outstanding are increasing, which is not a good thing, but companies like ABR increase shares to raise capital. But when shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 13%, which is an insane number. Annual payout is at $1.72 and payout ratio is at 78% and not the 97% displayed here. I prefer 50% or lower, so right now they have 22% left in cash to buy back shares, pay down debt, do acquisitions and all other things. The 5-year growth rate is at 11%, which is a great number. And they increased the dividends for 10 years in a row, which is also very nice. And if you take a look at these numbers, the dividends paid since 2012, you see that ABR did increase the dividends at a pretty high rate. In this graph we see the expected dividends in 2024 and 2025. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to grow at lower growth numbers, which is still pretty nice given the high dividend yield. Overall these dividends look pretty good to me, but how about the historical returns? I decided to compare ABR stock with the overall market, in this case the S&P 500. On the 5-year chart we see that ABR underperforms the S&P 500 by a decent amount. In total, ABR returned 61% including dividends, versus the S&P 500 sitting at 98%. The interesting part here is that ABR was capable of crossing the S&P 500 a few times, but always went down only short after doing that. On the 1-year chart it looks pretty different, with the S&P 500 returning 28%, while ABR is having a minus 4.5% return. On the 6-month chart it is again the S&P 500 that is beating ABR with significant numbers. In total the S&P 500 returned 15.6%, while ABR is at minus 12%. And keep in mind this is including dividends. On the 1-month chart we see that the S&P 500 was again the better choice here, with almost 5% return, while ABR is sitting at minus 6%. So bottom line, the S&P 500 beats ABR in both the long and the short run. So could this be the perfect time to buy ABR stock? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 8, 10 and 12%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 50, 51 and 52%. And for the free cash flow margin I'm putting in 32, 34 and 36%. For the PE ratio I'm putting in 7, 8 and 9. And for the price to free cash flow I'm putting in 11, 12 and 13. My desired annual return is 15%, since I can get an easy 10% average annual return with owning an ETF. Usually I put in 12.5%, but I want to build in a higher margin of safety with this company. Right now ABR stock is at $13. I hit analyze and we see a lot of green numbers. We have a low price target of $13 to $16.8. We have a mid price target of $16 to $20 and we have a high price target of $20 to almost $25. And to me the low price target is the most justified here, indicating that this stock could be undervalued. So my final conclusion is that I love ABR. It is currently in my portfolio and the main reason being the dividend. Since it is a high risk, high return company in my opinion, I'm trying to keep them under 5% of my total investments within my portfolio. I really love the focus on multifamily homes and they have some great times ahead in my opinion with that niche focus. Most fundamentals look good and they are performing strong and steady. However, I do think in the coming years growth will slow down a little bit. What worries me the most as of right now is the current ratio, that is being at an unhealthy level. Dividend looks really good with 13% dividend yield and 78% payout ratio. On top of that, they keep increasing the dividend yield. From a valuation point of view, things also look really good, even with the low price target. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.